All right, we should be live. Welcome back. It's TraderXO here. Once again, it's the 24th of February, 2025. The time is just after 10 p.m. UTC. How are you all? Can you just give me a quick audio check and that you can hear my voice and see my screen, please? We shall proceed. Yeah, are we all good? All right, just fantastic. Had a few technical issues, but we've managed to sort that out. So apologies for the delay. Just make sure that everything is up and ready. All right, awesome. Well, the market's pretty wild, hey? So before I proceed, I just want to give a very special thank you to OK Exchange for once again sponsoring this stream. As always, anything said in today's video is not financial advice. It's just my view of the markets and how I'm looking to play the markets, more for educational purposes than anything else. So we shall kick off by, I know I've had a lot of questions. Unfortunately, I've been delayed. Sad news was that somebody, good family friend of mine, had passed away. So I had to see to certain things earlier in the week, which kind of put a dampener on what I was hoping to get out. But we'll just, I've had to shift things slightly. So I'm just going to go over what the 4-week trading mentorship will be and what some of the key dates are going to be. So we'll just kick off. So as I said, today will be my last public stream. Good riddance, XO. You don't have to hear my voice again for quite some time, hopefully, especially in the public streams. But no, in all honesty, I'm looking forward to, like I said, I'm going to be focusing on other aspects as well as trading. There's a few things that I'd like to focus on when it comes to trading markets, especially equities, NASDAQ, stocks, indices, commodities, as well as Bitcoin. So that's primarily where I'm going to be most of the time, is just trading in the shadows. And I really want to pay a lot of attention because I feel as though we're at a critical point in the market, but also with the fact that I will be quite busy as well in real life, so I'm very pushed for time, unfortunately. So it's a shame. I would like to have continued streaming, but hopefully, you know, I may be back to do a one-off ad hoc stream every now and then. But I will be running the private group for 4 weeks, and I said the main emphasis of the private group is I just want to give back to the community, just a way of saying thank you for all the support, love and shown, especially those of you who tune into my streams week in, week out. I really appreciate that. And like I said, I've never had any intention of running a paid service or paid group. I've always, you know, enjoyed streaming. I enjoy giving back to the community. And I'm a big advocate of to educate is to learn twice. You know, it keeps me sharp, it keeps my trading sharp, and it helps me not only improve in my trading, but, you know, it makes me really think about the messages I portray in terms of teaching trading, how I wish I had somebody who I could look up to when I was first beginning. So I'm just trying to give all I've tried to do is give the foundations of price action. There's much more to my trading that I never talk about, you know, talking about processes, order flow, market profile, how I sometimes use the dominant ladder when it comes to playing around with or when I did play around with the indices and equities. So just moving on further, basically, registration form, I promise you, will absolutely open tomorrow. I did say last Tuesday, but like I said, I had the unfortunate news that a good family friend of mine had passed away, so that really did take up a good few days. So the form will be available tomorrow. I will tweet on X once it's available. You should be able to find access to the Google form either via X or in the description on today's video at some point tomorrow as well. And I just want to be clear that, you know, the onboarding process is such that you have to either sign up via OK Exchange or Prime XBT, depositing 500 and making a first-time trade or some trade volume of up to $500. Those are the rules and conditions as stipulated to get access to the group. And like I said, all proceeds, I will be taking a single penny. This is more for charitable causes. Whatever funds are raised will be given away to charity. So I'm not looking to profit off this in any way, shape or form. Okay. So onboarding will be on Substack. I will be adding users once you complete the Google form and you've met the requirements to join the group, then fine. I appreciate that there are some of you who are having issues with registering on OK Exchange or PrimeXBT for whatever reason. So don't worry, on the form there will be a section for those individuals who are struggling to sign up. And like I said, the key for me is I'd like to get everybody on board. I don't want anybody who generally wants to join to miss out on this opportunity. So I'll make sure that you all get on board personally if there's any issues. And for that reason, we're going to be going live on Sunday, 9th of March. It just gives me time to prepare some more materials, because at the end of the day, I want to give something back to you guys which is actionable, give you some of my processes, have a look at some of my documentation. So I'm just trying to prepare them in a way that gives you the foundations so that you can take them and use them however you wish to do so. Okay, so I just want to really enhance the learning experience. So, like I said, just looking to create those slides, the way I present the information, I've really given it a lot of thought. I think that's primarily the core of what I wanted to cover with regards to that before I start the live stream. Are there any questions before we move forward? Yeah, I've been thinking about this, and what I've been thinking about for those individuals who are restricted when it comes to registering on Prime or OK Exchange is to potentially establish a way on Substack where you could essentially donate to charity. I'm just trying to figure out what that looks like, but I want it to be transparent in terms of that everything we do is done above board, and the full transparency in terms of the funds and whatnot. No, thank you. I appreciate the condolences. Like I said, it was a good family friend. His son passed away. His son was only 34 years old. Not too far from my age group, but that's life, right? All right. So in terms of the group, like I said, if you've already missed out, if you haven't seen the slides, I will be covering my 2025 trading manual, although it'll be a watered down version because I don't want to overwhelm many of the subscribers or to the group, so I'm going to give you basically what I started off with in 2018, 2019, 2020, and how that's enhanced over the years. And we'll look at the trade planning and the trade life cycle, how I approach trades, pre-trade, trade execution, trade management, and then resetting after a trade. I'll be talking about some of the strategies that I trade in detail. So that's more trading systemization. And then obviously we'll touch upon the concepts of price, time, opportunity with order flows. And again, this is where your execution strategy comes into play, especially when it comes to trading something like Bitcoin, perhaps equities, NASDAQ, currencies. And like I said, there will be trade setups as well. So it'll just be a continuation of what I always do on these streams, but more geared towards the private group. Okay, it's not, if you're looking to join this and thinking that this is going to be some sort of call group or I'm going to just give you trade signals, then I highly recommend you not to join the group, because if that's what you're looking for, then there's plenty of paid signals out there. This is purely strictly more about not trading, but being a trader, and what are some of the processes that I go through. So I really want to give you a foundation and structure and process, okay? Instead of being results orientated, be process orientated, and hopefully that'll give you longevity in this game, essentially. But like I said, 2 to 3 private streams a week, Sunday market review. Every Sunday there'll be a market review starting from the 9th. We'll talk about the basics of auction market theory, market profiles, introduction to order flow footprint. So we might just cover the DOM and the ladder. Does anybody here use the DOM or the ladder to trade with? I'm probably thinking hardly anybody. It's not really something you find people using in crypto, maybe in equities and NASDAQ. Just give me a shout in the chat if you do use the DOM or the ladder. Is that something you'd be interested in learning? I can cover it in one of the sessions if you really want to have an insight, or even just understanding the basics of the DOM and the ladder. Absolutely fine to cover that. But I really want to talk about just touching on the concepts of order flow and footprints, really, just from an introduction point of view, but really giving you some practical examples. It's all well and good people teaching order flow and the theories of it, but really what we're looking for is examples, real examples of this taking place. So we'll try to cover that as well. All right, I think that's it really. So yeah, we'll kick off with the form tomorrow. I should have that released at some point tomorrow. I'll make a tweet. I'm not going to say what time, but just keep a watch out for the tweet. Okay. Right, markets. Holy shit, we're at 92 already. Fucking hell, we were at 94 10 minutes ago. Who the fuck is selling? I'm not fucking selling. No, I'm joking. But so I think it's a difficult one, really. I think when you look at the news coming out again with regards to tariffs and is likely to deliver those, I think this is having an impact on the market. If you look at equities, ES, that's selling off from the highs, 1, 2, triple top. We're getting some sort of rotation down. The question is, are we going to trade into this 50, 90, 5960, 5980 level and maybe get a bounce back up? Remains to be seen. Okay, same on the Nasdaq. I suspect that is probably rolling over as well. So yeah, no surprises here. To be honest with you, looking at Bitcoin, in terms of the trade setup that I shared last week, I talked about taking out the, especially on the timeline, taking out the 12th of December low and finding acceptance back above it. Took the long back into the mid, right? It's kind of the mid level that we talked about in the previous stream, that this is going to be the trading range that I'm focused on. I'm not looking at the highs or talking about Bitcoin breaking down to the lows. As far as I'm concerned, when it comes to the market as a trader, this is the zone that I'm focusing on, and this continues to be the zone that I'm focusing on. So in terms of the trade that I took last week, I kind of shared it on the timeline as well, and I talked about where I'm taking profit, how much of my position I've closed. I closed 2/3 here. I tweeted it pretty much in real time, and I said I'd leave the final third to trade into that hundreds level. We tagged the mid, but unfortunately I got stopped below the initial balance of Friday. That's where I got stopped. I can't remember what it was a hack, wasn't it? Sorry, yeah, it was a Bybit hack, which kind of I guess added sell pressure onto Bitcoin, as well as the options expiry that we saw on Friday and whatever else news came out. So I think looking at this, I get the sentiment. The sentiment I feel is fairly bearish, and I think the reason why it's fairly bearish is because alts are getting obliterated. When you look at the context of Bitcoin, you would question, why is the sentiment bearish? When you look at this price action here, we've been up here for the last 2-3 months. We're still holding above the 88k level. So until we find acceptance outside of this range, can I then start shifting myself into trend trading mode and riding the momentum down should we break down? Okay, but for now, I'm just going to respect the fact that if you look at price action here, could the top be in? Yes, it could. Okay, we talked about prior to this move up, I explicitly talked about that I'm not going to be explicitly shorting this, but I have hedged against my spot holdings, and I still hold that hedge. So from my spot that I purchased down back in August, September levels, we talked about this setup in detail well before it happened, that look for price to trade these highs. We're looking for some form of rejection here. You want to see longs getting trapped, you get the unwind, okay? Now, essentially, when I'm looking at price here, the fact that we can't find acceptance back above the 100k level, again, does give a level of slight defensiveness when it comes to trading Bitcoin. I took on the one long here. I did believe that we were going to get a pullback. That's pretty much what I mapped out, that we should see a pullback. I wanted to see this being the low, this being a higher high, this being a higher low. Clearly, we haven't held that structure. I've had no reason to get into a trade. And I think when you look at equities, SPX selling off and Nasdaq selling off, then it's quite likely that Bitcoin is also likely to trade lower down. So I'm just holding off jumping into a trade. I'll be very honest in the sense that I don't have anything clear to trade just yet. But there are some zones that I am interested in, and I'll cover that in today's stream. But long story short, we're just trading between this 88k level, which is the December lows or the January lows, I believe, through to this key pivotal point at 100k. All right. Now, before we talk about trade setups, let's just quickly rush through the high time frame technicals, starting off on the weekly. If you look at the weekly stock RSI, it's still oscillating at the lows. Price is still holding up in this range. The question is this range going to hold? I don't have the answer to that. Are we going to get a bounce and a push back up into the hundreds, maybe 1 or 2s, 1 or 5s? Possibly. I'm happy to play that direction. If that happens, equally, I'm not looking to short this into the range lows from this point onwards, okay? So for me, I'm just being very, very selective. Looking at the stock RSI, it's at the lows. Looking at the 3-day, also at the lows. And then when you look at the daily, it's, again, there's no surprise to me that this rolling over is giving inherent weakness in terms of price. Obviously, the oscillators follow price, but the fact is that in terms of probability, I've talked about this in the past, using mechanical oscillators to trade price at the extremities of a range. Okay, that's the mid, the high, the low, and that's what I'm looking for. Let me see the daily stock RSI come back into the lows. Let me see what price does. If it can hold at this level, then maybe we might just get one more rally up into the highs in March. Okay, so I think in terms of February, I'm not expecting too much more. Today's the 24th. I think we've got 4 more days left until the month, and that's all there is to it, really. Okay, so that's the stock. When I look at the RSI on the daily, the fact that the daily is still rejected off the 5011 and rolled over. Let me just get rid of the stock. Okay, so generally when you see this, a bottoming structure is more where you have this prominent inflection point at the lows. Okay, this is what I'd want to see. At least show me a shift in momentum back up to start going with the context that there's some good opportunities to start longing this. Because of the fact that we're breaking down and we're trading, I believe, close to the early open, I just want to see how price trades. It's still early in the week. It's still Monday. Are we going to get early lows of the week tomorrow and Tuesday before we see a reversal back up? Or are we going to see price continue rolling over until Wednesday, Thursday? Okay, so I'm not rushing into any trades. I'm not looking to knife catch. I've had plenty of long opportunities in this range, and it's been a really, really good range to trade, in all honesty, from both sides of the market. The question I'm asking is, how many more times are we going to keep testing the yearly open? 1, 2, 3, 4, 5th test off this level. I would much rather see price trade lower down into that Monday, February the 3rd range, filling some of this inefficiency, potentially lower. Maybe, just maybe trade in this zone between 90 to 88k, and let's see what type of reaction we get if we get a setup from there, which I will cover in today's stream as well. So just high time frame levels that I'm talking about here that really stand out, which I think offer good risk to reward profiles. Risk to reward in the sense where if I see a reaction off this level, I've got a clear invalidation. If it breaks below, I know exactly where I'm getting out. Here, I don't have anything evidently clear. The fact that we're testing the early open, just want to see how this develops over the next day or two, okay? The other concerning factor for me is, if you recall, let me just go to a different chart. Bitcoin USDT on the Bitstamp pair. When you look at the moving averages now, this is really starting to develop an interesting picture. Now, and this is where, again, this is something that you need to pay attention to. When it comes to moving averages, people just look at the moving averages for what it is without really understanding the context. And for me, it was very clear. I said last week, right, that look, yes, price is under the 1225 daily EMAs, right? But as long as this was remaining compressed under the 1225, I wasn't too concerned. The fact that we're now getting expansion away from there is why I've become slightly defensive in terms of looking for any aggressive longs. Okay, so I'm now being reactive instead of trying to be aggressive in terms of front running the flow and getting into a long. I'm just going to be slightly more defensive because I don't know if we're going to run this low here, or are we going to run this low here, or if we get acceptance back inside the previous trading range, which has pretty much been the range since 5th of February all the way through to the 24th. So that's good. 20 days price action in a fairly tight range. I'd need to see some form of acceptance to entertain the possibility that right now perhaps we can go back to the mid-range, if not higher, to the range highs, 104, 105, 106. So for that reason, looking at the EMAs, seeing this expansion down has just got me holding out here. Are we going to see price trade into here, into this demand zone? That's what I'm trying to figure out. So nothing clear just yet. Looking at the weekly, we have the weekly time, the weekly 12.25. You can see we're trading below the 12. How many more times are we going to keep testing this 12 weekly EMA? 1, 2, 3, 4, 5 times. And now we're trading through that level. Okay. So again, I would need to see strength in the market, or at least for price to get back above this level, which is coming in at 90, just call it 95s, okay? You want to see some form of acceptance back above 95 at least to give yourself a chance, or for Bitcoin to give itself a chance of trading back towards that 100, 102, 104K level. But failure to do so brings us into play into this 87.8 level where the current 25 weekly move EMA is, right? And this is probably going to, I assume, probably going to be trading at 88 by the end of the week. So now that we've identified that using the 12 and the 25, in terms of high time frame context, you've got the 12 at 94 point, just call it 95. You've got the 25 at 88. Okay. So I need to see one or the other. Now that, if you make a mental note of this, 95 and 88, when you go back to the chart and you mark those levels out, if you mark out 95s, that's in this zone here, okay? Literally this range low that I've talked about. That's the 95 area. So that's the first thing that I would want to mark out from an EMA perspective. And then you've got the 88s, which is where essentially where this red line is, give or take, okay? This entire zone over here. Now somewhere in between there is what I'm looking for price to give me a reaction to. So it's a question of, are we going to run Monday the 3rd lows, which is the February lows, okay? Are we going to run February's lows into that 90, 88K level before we see acceptance back above it, respecting this swing low, and then we push higher again? That's one probable scenario that I'm looking for. Again, the classic signs that I'm looking for is aggressive short selling into that level, along with long liquidations or longs puking their positions, right? When you have a long, and to effectively close that position, what are you essentially doing? You're taking the other side of the trade, aren't you? Okay? For every long, there's a short, and for every short, there's a long, right? So they're the two levels on the high time frame, just purely based off the 12.25. Then add in the context, the fact that we've got this local support level, local range, happens to be at 95. That's exactly where the 12 EMA on the weekly was, right? So that's one possible setup that I wouldn't mind taking. And if I am going to take this trade, then, like I said, what's going to be the trigger point? It's not about a range reclaim for me. So many people preach range reclaim, right? But all right, range reclaim is all well and good, but what really matters, and this is the defining aspects is being able to interpret what happened down here. And this is where and why, for me, order flow is important. Yes, you can play the range reclaim. You've got an invalidation here. Close your eyes, punt along. You might be right. You could be wrong, okay? But what increases the probability of possibly being right is understanding what happened at this level here. If we run the February lows, if, okay? Not saying we will, if. Okay, there's nothing certain in trading. The market doesn't owe me anything. I just have to know what my strategies are that I'm trading and at which levels would I like to see that occur. What do I need to see? At what level? How am I looking to get on board? And why am I looking to execute the trade? Okay, so that's why although I haven't touched upon order flow over the streams over the years, just to keep it purely simple from a price action perspective, price action is fundamental, okay? That's the first and foremost aspect. Order flow is just a tool of confluence to give you insight as to what's happening. Are market aggressors selling here, but they're unable to push price, and they kind of get caught offside once price trades against them, and then what happens is that they puke their positions, okay? And you get those fast moves up. Okay, that's what I'm looking for here. If we take out this low, or potentially this here, or one of these two lows. Equally, we might just stop here and turn around and push back up into the range. This is not going to force me to take on a long, because what if this is just a break out of this value area, okay? This balanced bracketed area where price has been rotating, and all we're going to get is a push back up, underside retest, then we get another leg down, okay? So I'm not really looking to trade this zone here. There's nothing clear for me. After this, if this was going to push higher, why is this back down here is what I'm asking. Why did we not see that shift in market structure where we've been going sideways, right? There's your range. We take out the lows, we get back inside, we run the high. If this is bullish, I want to see this hold as a higher low local and then push on higher. Did we get that? No, we didn't. What did we get? We ran the highs, and instead what all we're getting is that same level, reaction, breaking down. Now we're trading below that previous swing low that we had earlier in the week. So that's why, and if you look at the reaction from there, it's not really been a good reaction thus far. We're not seeing participants aggressively step into this just yet. And when you look at NASDAQ and equities, then potentially that also plays a part as well. What tool website do you use to identify flow? I think a lot of the guys on X like to use XO charts. Some people prefer to use Sierra charts. There's Quantum Tower, there's ATAS, which is ATAS. They're the four that come. There's Ninja Trader as well. They're the five that come to mind. But there's plenty of videos online if you really want to learn the subtleties of order flow trading. But like I said, it's something that we will cover, or at least give you the foundations, and maybe at some point back in towards maybe late summer, I might do a more advanced session of order flow trading with some streams, okay? Just something that we can play around with. It might be equities, it might be a NASDAQ, it might be on Forex futures, but just to cover slightly more advanced concepts than just the foundations of reading order flow. Yep. Yeah, I will be doing it. I'll be doing some demos in the group. So, like I said, my game isn't to guess. My game is to react. Okay? Every day I need to turn up and react to what information I'm seeing. I need to bring the best version of myself to the desk. I talked about mental capacity earlier in the week, right? And one of the ways you can reduce the mental capacity or mental stresses of trading is trading your best setups, being patient. But what does being patient actually mean? Have a think about that word. You see it touted on Twitter all the time. Be patient, you know, let trades come to you. What does that actually mean? sit on your hands and do nothing? Not really. What being patient means is knowing that you have a clearly defined strategy or set of strategies and you're waiting for the opportunity to go in for the kill, okay? When you see what you're looking for at a certain level or zone and you get confirmation in the data points and it comes into one of your strategies that you're looking to play, that's the optimal time to execute the trade. That's what being patient means. Not sitting on your hands and wait for lower prices or wait for a pullback. What are you waiting for? What is it specifically that you're looking for? So the question is, what are you looking for? What is it that you're looking for? What do you need to see? Where do you need to see it? And how will you react to that data? And what's your... You've got to poke holes in that setup. What if it doesn't work? If it doesn't work, where are you wrong on that idea, okay? It's that mindset of thinking in probabilities. And the only way you're going to develop that is by having a process, a systematic process. And that's something that we're going to cover on the private streams, right? If you honestly have taken, say, 20, 30 trades, can you remember trade number 12 or a trade from 16 weeks ago on Bitcoin? What happened? What was the outcome? What was the result? Why did you take the trade? And if you're not journaling or documenting that, how are you ever going to improve? So that's one of the things that I really want to focus on is we talk about the mental aspects of trading, but you have to have a process. And part of that process is journaling the mental ability or the mental aspects of trading. So, you know, mentally being prepared. Both supplement each other very well, the technical aspect and the mental aspect. So I think, I mean, is that evidently clear what I've talked about? I can't see a shorting setup. Well, I do, but I don't feel comfortable talking about it. I think it's slightly more advanced. It would be a very more of an intraday trade, latching onto the momentum. You know, so say for example, an intraday trade, right? I'll cover it here. An intraday trade, okay? So if you remember what I said to you, in fact, let's do this here. Let's talk about it. I've been talking about higher time frame zones. I want people to know that I'm waiting for these extremities. You see me often preaching about it. It's not the only style that I trade, okay? There's a lot more that I do behind the scenes which people never see or never know. And the reason I keep it simple on streams is just to give you a foundation of where you're going to get the best reactions from which zones. But if I'm day trading this, if I'm looking for an intraday setup, if I've already talked about the fact that 95k is resistance, then what am I looking for? Think about it, right? If I said to you that I'm essentially hoping that I see a long setup down here somewhere, and that this area is no trade zone, I need to see price run this or come down lower down to even think about contemplating longs, right? But if I want to be aggressive, and let's just assume that Wednesday, Thursday, we get a bounce back up into this 95k level where the 12 weekly EMA is, then I'm looking for a rejection off here, looking for price to trade through the early open down towards this Monday low, February lows. Let's just call it February lows, okay? So now that I've kind of gone over the context, dropping down to the 1 hour time frame, such that if there is a temporary short squeeze, right, whereby price finds acceptance back above here, we get a move back up, takes out this, trades into here, gets back below, stop at the high, trigger. You've got a very tight invalidation, 95.6, 95.7. Your entry is just below 95, you're targeting 91, and potentially, and a bit extra if you get the breakdown, okay? And this is where you can use order flow not only for trade execution, but also for trade exiting as well. And I feel that's a skill that many people are so blindsided or one-dimensional that they're looking at this from an order flow perspective, right? Okay, I'm looking for shorts to get trapped in here. Longs get liquidated, aggressive shorts pile in, they get trapped, price reverts the other way, and we go higher. Okay, but how can I use that to my advantage if I'm trading short into this zone? Observing what's happening here or here, and then thinking, yep, I better get the fuck out of the trade, and then quickly flip the other way, right? That's the fluidity that I strive to have when it comes to trading markets. So taking those intraday moves into that high time frame zone that I'd like to do business on the opposite side if it sets up. And guess what? If for whatever reason that the flow into this level is not giving me the long setup, and people talk about a reclaim, they'll blindly reclaim it and it just breaks down and continues lower. I should be able to gauge that from this point, depending how this reacted, that, all right, I could tighten my stops up, take some profit, but I'm going to let the rest run. If price trades above here, I'm comfortable with that as long as it doesn't exceed back inside the early open. Bear in mind that I've already taken, say, hypothetically 2/3. But if I see this over and back under into this zone, I fancy the probability that we take out the lows here and go lower down. When you look at the risk profile of that trade setup, right, we talked about price trading back up into this zone, rejection, there's your trigger, target one, wait to see how price reacts. You probably want to take 2/3 off. There's your risk to reward. That's comfortably a two hour trade with some sensible position sizing. Okay, so that's where I talk about being aggressive as a trader. Not aggressive as a trader, but actively trading the flow of the market. Okay. If I was to be given a trade back up into here, obviously I'm not going to chase this here. All right. Does that make sense? There's many ways you can trade this. That's just one example of how I may look to get into a short, although I don't advocate for you guys to short the market from this point. It's certainly something that I may look to play. Okay. If I see, again, using order flow, if I see absorption at this level of short longs being absorbed and they can't break higher and they start failing and these longs get trapped on the level reclaim, well, what do you think is going to happen to these that get trapped? They're going to repeat their position and then you get the move down again, right? So just something to bear in mind. So are we going to see a short squeeze? Are shorts piling in? I don't know. I haven't checked the flow. I haven't checked the footprints or the open interest and CVDs and whatnot. But that's if we do see a short squeeze, temporary, before we trap some local longs and then pew back lower down again. Okay, just ways of thinking the market lower time frame. Was that clear? Did that make sense? So again, please understand, I'm not saying this is what's going to happen. I'm just telling you this is how I would trade the market, the zones that I would trade the market. And I'm also giving you the context and the reasoning why I'm looking to take on those trades, okay? VWAPs, market profiles, footprints, etc. We'll cover that on the private sessions in week 3 and 4. Weeks 1 and 2, we'll be talking about process. We'll be talking about journaling, trade sheets, right? Okay. So, I mean, what should we keep the stream short? I mean, look, we can certainly carry on if you want me to carry on, but I think when it comes to altcoins, I've already advocated. Look, so I talked about Solana last stream, so let's cover that. I was looking at that 180 level to hold, right? I didn't get the reaction. We did, right, on Solana. I remember this, talking about this. We did, I think we were over here, right? And if you remember what I said, I clearly talked about this 180 level, okay? And I talked about the fact that, look, 2 setups here. Are we going to take out this low? I want to see price take out this low. I don't feel comfortable long in this. I want to see price move lower down. Give me acceptance, go for the longs, or trading this, okay? And I remember actually taking the trade from, I think it was around about 160s. And I closed on Friday, along with my Bitcoin trade that I closed. I should have tweeted about it, to be honest with you, but it's fine. Okay, I think this was the trade setup that I took. So you can see we took out these lows, right? So I've got the chart on the timeline. It's on my other PC actually, but I think I may have deleted the chart on Solana. Shall I map it out again, or should we just fuck it off? But basically, look, long story short, clear setup for me was the fact that we took out this swing low here. Now I'm interested, okay? And the fact that we've got this level here, right? So when you look at price from this perspective, we filled in all of this inefficiency over here. Why is this important? Well, if you look at price historically, we never really came back and tested this demand zone, okay? We never really came back and tested any of this. You can see how price stopped short here, We never tagged this zone and pushed away. So what I was looking for essentially for price to come in and fill this inefficiency, take out these lows, get back inside, above here, into this local resistance is where my first TP was, okay? And at this point, I was hoping for something like this to get long. That's essentially the trade that I was looking for. That's the trade. So this structure here, this double bottom, higher low into this block, demand zone, local demand zone, to get long again from 170s into 190 and then to probably this zone here. I think the yearly open was around here, around about the 200s, and then see what happens after that. In the context that I'm looking for lower prices. Okay, so if you run forward, what happens? The price action was very, very clean. We did actually reject off this level. And that was the level where Bitcoin rejected off. When Bitcoin rejected off 99.5, 99.6, just before the Bybit hack, right? Okay, so that 180 level here, sorry, not this level, 180 level is the one over here, okay? So you can see we're shit through that zone now. So the next question is, what do? I do not want to be catching this knife, in all honesty. Is it worth, I mean, if you think about it, right? Is it really worth trying to long this? I don't see how this reverses, if I'm honest with you. I don't think we're going to get an aggressive V reverse like this. I would believe, or I lean towards the fact that, look, when it comes to trading levels or trading zones, right? This is the actual zone that I'm looking at. You've got the swing highs here in 2021. You've got the lows here. It's such a clean range. The magnet for price, in my opinion, is down here. After that, I think this offers a better risk to reward from a long perspective than anything in here now. And the fact that we keep fucking breaking down and trend, this is now a trend. This is not a range or a consolidation pattern. This is a clear on trend, whichever way you look at it. And at the end of a trend, you get acceleration into some form of capitulation lower down. So I don't know whether this is it or whether we break lower down. If Bitcoin's going to trade, look, if Bitcoin's going to trade that 91, 92K level or 88, then what do you think Solana is going to do, right? If I'm being defensive on Bitcoin, and this is what I mean by, if you get the picture on Bitcoin right, you'll get the altcoin trade right. And when you look at the picture on Bitcoin, we're trading below the yearly open. So why would I want to even entertain the possibility or probability of long in Solana when it's not in my favor? Can you see anything here that you could confidently take a long upon? Or do you think the probability is that we could fill in some of this wick further lower down? And then maybe we get a reaction, right? So if that's what I'm setting up for, then hopefully, according to my strategy, what makes sense to me, I don't care what other people are doing out there. Everybody's got their own system. I only focus on myself, okay? When you focus on yourself, don't care about who got what right and wrong. Doesn't matter. Let them do what they want. You just focus on yourself. Equally with me. Don't pay too much attention to what I'm doing. I'm just giving you my reasonings and thoughts on how to think, but I want you to take that and think for yourself. If Bitcoin is going to trade lower down, then I like, again, listen to what I say, I like the probability of the fact that Solana could very well trade into that 130, 120 zone. And I think what would be a very, very good long setup. First of all, I do not want to be standing in front of this fucking train if it's going to go lower down. And it does something like this. It really cascades lower down. You get the long liquidations. And then you get the acceptance back inside. Look at the wicks every time we came down here. Okay? Look at that. Look at historical price action. So I don't know if we shit through this level, how deep this wick is going to be or how long this wick is going to be. But what I do know is that if we do happen, and again, this is worst case scenario, if we do happen to drop into this zone, then I'm looking for a trade setup. Okay? If we drop into this zone, then I'm looking for a trade setup to long for a reversion play back up. Because then you've got this mid-range here. All right, let's just delete this, clean up the chart, clean this up, remove this. We've got two zones of possible interest. I'll do this one in this pinkish color. Well, let's get rid of pink. Let's do it in gray. Or potentially lower down into this zone here. It may seem extreme, but it could happen, right? If Bitcoin shits through down to 88, where do you think Solana might end up then? With all the additional selling pressure, right? People will want to start realizing their profits. How much more pain can they endure on the way down? Are they going to round trip all that holding, emotional holding from January 2024? And eventually, should price get back down there, all the energy and time consumed just to fucking puke it down here again. Awful trading. Okay. So be open to the possibility that we could bottom here, or we might get an overshoot somewhere here in this level. Wait for maybe we get a level of consolidation under here, compression, then get back inside. Okay, then you've got the trade set up back to the mid-level. That's how I would trade this. Rotational in this entire zone. Look at that. Okay, back and forth, back and forth, back and forth. You got the extreme to one side, you might get the extreme to the other side, and then back inside again. Okay. You've also got the fixed volume range profile. You take, just eyeballing the chart, you take this low to this period here. Okay, so that's your value area, high, value area low. Let's see what we get. Are we going to get something that breaks out of value at the lows and back inside value? Then you look to trade it back to the mid-level, okay? Mean reversion, back into the mid, potentially back into the value area high. Okay, value area high, value area low, you got points of control here. Just something that I use to add confluence, but I can visually see just by eyeballing the chart. I don't need to use that to tell me that this is the key level. Intuition should be able to tell you that, look, this is the key level here. There's going to be a lot of interactions here, so this is the pivotal point where you can potentially pivot off a trade, all right? And again, RSI on the daily, I think, is fairly oversold. So even though this is oversold, right, is that a reason to start longing this? What environment is this that we're in? We are in a trending environment. Okay. Oscillators in a trending environment can remain overbought or oversold, causing divergences with price. Okay. Yeah, stock market is more key than crypto. Well, I'm sure the stock market selling off, equity selling off, is going to have a bearing on crypto, right? But that doesn't stop me from looking for good trade setups. Not everything comes down in a straight line, okay? So are we going to see potentially one more push and we get a divergence on the daily? This is trending higher, this is trending lower. Maybe we break below that value area, that 120. And then we get back inside for that reversion trade back into 170, 180, okay? Or maybe we just stop out here. I don't particularly fancy taking this trade here. I would much rather take this down here. Into here. On the backside, back up again. Because I'm pissing against the wind. So I want confirmation that I can take the trade back up, okay? If this was a market where we get that breakout, then I can be more aggressive on the pullbacks. But this is the trend down, okay? One direction. Is that clear on Solana? Absolutely. That's why I said, you know, you've hit the nail on the head, Gianna. It's safer to let the knife fall on the floor and then pick it up, as opposed to trying to catch the knife. And look, use some reverse psychology. Use some very simple reverse psychology. Would you long this? Sorry, would you, if this is trading higher, right? Would you start shorting this? Or would you feel much safer shorting this, right? If price comes closer to these highs. If you're long this market, assume that, you know, we've got an inverse Solana chart, but fuck the fact that it's inverse, right? If you're long this, what are you targeting? You're targeting these highs over here, aren't you? Hypothetically. You'd love to see price trading into there. And such that when price gets closer to those levels, you got a level of SR here. You might want to start taking some off. You've got another SR level here or here. If price starts trading back into here, then you might take some more off, right? Because you might get that reversal. But you really want to see price squeeze higher, don't you? You really want to see shorts. Anybody who's trying to short this, get squeezed the fuck out into here, and then you might want to take the short back down. So why is it any different? Look at the context. Long this, stopped, liquidated, shorts piling in. No such reaction just yet into this low. Long. Price bounces. They're offside. They puke. Price goes lower down. Just be open to that possibility, okay? But it depends on Bitcoin, which depends on equities and Nasdaq. Get SPX Nasdaq right, and then that'll probably give you some kind of coordination on the setup on Bitcoin as well. ETH, all right, let's look at Ethereum. Well, Ethereum, there's nothing really much to say. I mean, I've already covered my thoughts on Ethereum. I don't know why anybody's surprised that ETH is back down here, if I'm honest with you. First things first, what did I talk about on the last stream that I did? Does anybody remember what I said on the previous stream? That when you get these extensive sell-offs and you have a real significant structure break, what happens thereafter? You need to see a base being built. You need to see a phase of consolidation. Bitcoin is breaking down. Equities, SPX is breaking down. Nasdaq is trading lower. So why the fuck is Ethereum all of a sudden? Everybody keeps fucking bagging on about buying Ethereum, got my conviction, gonna go high. You've just fallen off a fucking cliff. We broke through this key 3,000 level, right? Took out this. This is where the liquidations kicked in at this point, right? So I remember a while back, look, if you look, I'll give you a subtle tip here as well. And again, it's the subtleties of price. When you go to the 4 hour and just clean this up, let me just remove this chart. Which was a 4-hour liquidation candle? It was this, wasn't it? Price broke down. What happened here? Isn't this where liquidations kicked in, right? On this 4-hour candle? So where was the origin of the move of this liquidation? This here. Ping this to the right. What's capping price? There's your answer. So what I said was, don't expect anything on Ethereum. We're not going to break out into a trend anytime soon. Obviously, I could have been wrong, but my conviction and confidence in the fact that we've just had a massive structural shift, I just couldn't see how this is going to veer reverse back up again. Everybody thinks that this is going to be a deviation. We're going to get back above, and fine, yeah. As a trader, if I saw that an acceptance back above, I'd be tentative because I don't want to get trapped in here. But fine, I'll take the loss if it gets back inside the range, right? You're probably going to go to the inside of the range. But from this breakdown, I just couldn't see how we were going to catch a momentum bid back up again. What's the fuel? What's going to fuel that move higher? So I'm still leaning towards the probability that when you look at price on the daily time frame, I'm right in what I said, in the sense that don't expect anything other than another range-bound environment in here. Don't be surprised. Okay, this was Monday. This was February's low. This was Monday the 3rd's high, that liquidation point. There's your mid-level. There's your range lows. I believe at some point that we will gravitate and oscillate towards the lower bounds of this range here. How much of this wick do we fill in? I'm not too sure, but it wouldn't surprise me. Okay, it would not surprise me. Yeah, we've covered Solana. So does that make sense? I want you to really think about trading from a structural point of view as well. That even the simplest of tools is going to guide you. Even the simplest of strategies is going to guide you, right? And a simple strategy on something like this type of a structure break is a trend scanner. It will keep you on the right side of the market. Is there any reason to flip bullish? Has there been any reason to flip bullish in this zone here? No, there hasn't. Then when you add in the weekly, what the fuck has just happened here? Mind my language, I shouldn't swear, but what's happened here? When have you ever known a point when we shift context and the EMAs on the weekly crossover that let's get bullish straight away soon after it? It takes time to build out these bases, okay? It takes time. Again, look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, nearly 12 weeks before we shifted context. Above that high, now you can play the trend up, okay? But as far as I'm concerned, when I look at this, across the board, these are the key lows for me here. This whole area over here. That is where I think a better higher time frame level, if you're looking to trade higher time frame levels, I think there's a fairly decent probability we will get this over the coming months, at least in Q2 or Q3 at some point. So from a high time frame perspective, for high time frame traders or investors, let's see what we get should we trade this level. But for those who are trading the market, you could have clearly played the rotation down from that rejection point, local range highs. It's that same move that we saw in Ethereum back in August 2024. Right? Because look at the point of origin from where we sold off last time. Look at the point of origin from, look at that, wicks up, sell off, okay? What happened thereafter? 3 month range. It makes sense, but how does it transfer to SPX or Nasdaq? It could help to be more clear about that. Well, if there's overall a risk-off environment, then why would ETH or Bitcoin counteract against risk-off in equities and SPX and Nasdaq? Why would it? How often does that happen? Rarely, if ever. You might get a disconnect for a few days, right? But I certainly don't want to be pissing against the wind. Like I said, if SPX is going to trade lower down and Nasdaq is going to trade lower down, then you can factor that there's a decent probability that we may just see slightly lower prices on Bitcoin and therefore the beta assets like Ethereum and Solana. So what if Bitcoin goes to 105 from 90, then ETH wouldn't go higher? Well, my question, all right, so the question is from Majid, so what if Bitcoin goes to 105 from 90, then ETH wouldn't go higher? You can gauge the strength of ETH BTC as to how it performs. When Bitcoin has been trading higher, at what point has ETH shown any strength? It hasn't. When you look at XRP rallied. Why didn't Ethereum? I think there's a real disconnect this cycle with, generally in previous cycles, everything would run in tandem or together. This has been very, very different. And I think that's reflective of aspects of dispersion, not enough liquidity to pump everything at once. We've talked, you've seen on the timeline, people talking about how meme coins and pump fund has really drained or concentrated the liquidity onto the Solana chain and meme coins, right? Therefore, altcoins have been very lackluster. So why would you expect Ethereum to outperform Bitcoin when Bitcoin has been outperforming Ethereum for the vast parts on the way up? If Bitcoin trades 105, Ethereum might just trade back to, Ethereum could essentially trade back to 2800. That's it. This is a massive level of SR. So I suspect that looking at price, looking at what I've gone over, that I wouldn't be surprised to see some of this filled in later in Q2, Q3. And I personally think there's much better assets than trading Ethereum. I just think there's much better markets out there like XRP, Solana. They are the markets that I've been trading actively. I pretty much shorted XRP from the highs. I said it ahead of time, where, why, what I'm looking for, how. And as far as I'm concerned, I think any moves up, I mean, I can't see it personally. I'm always open to the idea, but anything into here, I think we trade. All right, certainly I think we trade into this zone here, 150s. That for me is the context. The context for me is very simple from this point onwards. I do believe the top is in. I'm happy to be wrong. That's a loosely held opinion. That's not something actionable. And if I'm wrong, great. Altcoins go higher, right? But for now, as I stated on the previous streams, that I can have an opinion, yet I can trade on the opposite side of that opinion. So, but for me, the context is that I do believe that we will inevitably trade over the coming weeks down into this zone here. Or certainly that's where I'm leaning towards until I have a reason to shift bias, okay? Hype, I think Hype is one of the altcoins that I will really look forward to buying if it's significantly lower down. I would absolutely want to get positioned on Hype in a bear market. I think it's going to be one of the best, not financial advice, but I think it's going to be one of the best higher cap plays. I think if they can deliver what they've set out to deliver, I think this could be right up there with Solana for whenever the next big wave of the altcoin cycle is. For XRP, I think XRP is cycle top. But that's a big statement. And I generally, nowadays, I stay away from such statements, right? But I'll say this much. If I'm being objective as a trader, how about I ask you guys a question, right? So if I'm wrong and you guys are wrong, we can all get laughed at instead of XO just getting laughed at. But you tell me. You tell me. You look at this chart. You tell me, is the high in? You tell me. I think it is. I think there's a very good chance the high is in. I'm not afraid to say that. I think this is pretty much done for this cycle. And I do believe that we trade back into this zone here. But you tell me, guys, XRP is the top in. I mean, look at the rejections on here, right? We haven't even closed above the previous all-time high. So I do believe, yeah, I do. I think there's a very good chance we trade into 150s and then potentially lower down as well. If I'm wrong, then I'm wrong. XRP is going to 589. And I'll be sidelined. I mean, XRP could go to $8, probably in the year 2050. We've still got another 25 years left before it gets to $8, right? But looking at this, real talk, I think we've. I do believe that this is a very good probable chance of the highs being in here. At least for this cycle. At least for Q1, Q2, Q3. If we trade it back up there, I don't mind. I mean, if we trade back up there, great. I'll get to go in with a bigger short and ride it back down again. I'll probably get to trade it back up as well, so it doesn't make no difference to me. Total 2, total 3. Yeah, I mean, when you look at this, it's, again, this is on the weekly time frame. The problem is this here. See the band's compressing now? I bet you if we go to the 5-day, this is already crossed. And it will eventually cascade onto the weekly. So, alright, it hasn't quite crossed. But we're getting very, very close. How about the 3-day? Yeah, that's already done. Okay, so I don't know. I think we could see lower prices, if I'm honest with you, heading into Q2. Now that we're getting this shift in context over here. And what does that mean? That means that we could do something like this. And again, this is where, in this, I just want to be clear. In this market environment, it pays to be on the right side of the context of the market. So you guys tell me, what is the context telling you right now? Are we trending up or have we started trending down? And if we're trending down, then where are some good trading opportunities? Do you want to be flowing against a trend and knife catching? Or is it easier, right? Is it easier to sell when you get a sell-off, the mean reversion back into the bands, lower down. Mean reversion back into the bands, trade, lower down, okay? Till you get some form of range band environment. You get the deviation back inside the bands, trend lower down, okay? So looking at this, if we are going to trade lower down and then mean revert back into the bands, probably a decent short off this level here, lower down again into these lows. That's the safer setup, as opposed to trying to catch a knife. And the second, again, let's talk about structure, right? When you're coming off a trend like this, where prices, and it starts doing this, trading lower down, you're not going to get this via reversal back up. Okay, very, very rarely does that happen on the high time frame context. What you would need to see is coming off something like this is, again, a zone of consolidation. You're probably going to get something like this. You get slapped back down, this, and then this. Okay, that's sorry. Let me do that again. So you got the low, you've got a high, equal highs, lower low, higher high, higher low. Now look for the context shift to get long. Okay, that's the shift in context. That basing pattern in a range. You play the lows, you play the highs, you play the lows, you play the highs, but then you start looking for the shift in context to think, right, let's go for the highs again. But what I want you to pay attention to, and a telltale sign of markets that are likely to get hit back down, is when you see, okay, look at this. Right, if you look at price here, let me just get rid of the, in fact, we'll leave it on. If you look at this here, price bottoms out, straight rip back up, okay? No fucking about, very fast move back up, exhausts, look at the wicks, into this SR, rolls over again, okay? So what I'm trying to tell you is that you can essentially in a downtrend, and it catches many people off guard. So you have this uptrend, markets are doing great, everybody's winning, get a distribution top, breaks down, and now it starts breaking lower down. You get these aggressive moves up, and then people start chasing this, thinking, shit, is this the bottom? Chase, 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 chase. Buy some more here, and guess what? It happens to be the top. This is not healthy. The probability of this coming back down is quite high when the context is in a downtrend. Equally, flip side, when you think of a market that's been range bound, right, and it breaks out the range, it trends higher. You get this sharp move down. You're looking to buy this, aren't you? You're looking to buy that sharp pullback, and then looking for that continuation higher. So why is it any different in this scenario when you get the trend down, aggressive bounce up, but it runs out of momentum and steam, volume drops off, or you might get a very high spike in volume, but price couldn't push further? That's a telltale sign, and then it rolls over again. Okay, go with the context of price. That will offer you, that first aggressive bounce will offer you a good shorting opportunity with some patience to trade back towards this zone here, and then wait for the shift in context. So that's the point I'm trying to make, is that when you are looking for those plays, you will see those fast, aggressive mean reversion plays where it just relentlessly goes up, tops out, and then just rolls over again, and it comes down just as fast. I remember shorting Solana in 2022. It was at a time when the majority were bullish, and I even without looking at the Solana chart, I can tell you the price that I shorted it. I think it was at 140 or 145. What happened was we got price selling off aggressively. I think it traded into the 90s or 80s, and we had this massive rip back up to 140s, 130, 140, 145s. Got many people bullish. Oh, look, level reclaim. Price is going to go higher. The minute it got back under, it rolled over even quicker. So let's have a look at that. See if you can recall that out of the memory bank. It was this here, right there. That there. See that $80, right? I fully know this off memory because I remember trading this And I remember the sentiment and the emotions on the timeline, and how reclaiming back above. Look at this aggressive downtrend. Look at this SR level. Look at the move up, very fast and aggressive. This is what got people bullish. The fact that they deemed this to be a range. But like I said, for me, in a downtrend, I would need to see a slightly more consolidation. For me to get bullish on this, this is a good long. That doesn't stop me from trade. Just because I'm not bullish doesn't stop me from taking a long, right? I can trade this on a reclaim to the range highs. But just because we saw acceptance above this key level here, look at the structure. A bullish scenario would have been pull back into here, hold, rotate, maybe higher high, pull back into a higher low. Then I would say let's go. Much better structure. But if you look at this, where did we reject from? Let me just bring up the volume profile. The volume actually. So these are the subtleties of price in a downtrend, and what I want you to just be aware of now over the coming weeks and months. When we get these faster aggressive moves up, they are fantastic trading opportunities, but by no means don't get caught into that mentality of, right, the bottom's in, alt season's back, just because you've had several days of green, aggressive green. But look at the volume. It's literally non-existent compared to the volume on these drives here. Okay, on these drives here, it's literally non-existent. It's a low volume environment. These low volume rallies move very, very fast because the books are much thinner. Okay. One, you're getting shorts getting squeezed out. Two, you're getting momentum longs piling in. Three, you're going to get top longers piling in right into that supply zone there. What happens? Rejection. Pretty much where I shorted from. Straight back down. Okay, remember what I said? Fast move up, equally fast move back down again. Watch out for this. Okay, don't get caught trapped into believing that it's time to get very bullish on altcoins again. Just play the market for what it shows you and just be aware of the key high time frame zones. Now, if you look at the trend scanner on the 3-day, this never crossed. If you look at the trend scanner on the weekly, it would have kept you in check. Look at the crossover there. Reversion back into the bands. Failed. The minute it gets back under, you know you're fucked. In this structure, you need more basing. Something like this for it to give you a chance of trend continuation. Even on Ethereum, though, there was an example on Ethereum from last year. It was this region here. That's what you need to see with the bands before you can think about higher lows. Context shift, long. Okay? Does that make sense? Is that clear? So the point of that was, don't get caught into thinking that the context has changed when in reality it hasn't. Now, I'm not talking about meme coins or low cap coins here. I'm talking about the higher caps, the structure of these higher cap players, okay? Don't trade against the bands. Play the mean reversions, long, short, fine. But don't marry this context that alt season's back. I don't use so on Bitcoin I use relative volume, but on altcoins I don't use relative volume. I'd much rather use a volume profile or a market profile, so something just have a peek at volume. And again, this is something that I'll cover in more detail on the private streams for 4 weeks. Using a fixed range volume profile now. Value area high, value area low. Majority of the volume, 80% of the volume was in here. You can see how thin the volume is here. Okay, these thin tails is something that when I see these thin tails and price gets back inside the value area low, I want to trade towards the value area highs. Okay, it was also one of the reasons why on Solana I exited 275s on January the 19th, and I tweeted about it. Okay, that I've sold all of my Solana spot position. It was the target. My target was 300, but when you place a fixed range volume profile on here, look at the thin tail. Can you see that here? Not a great deal of volume traded up here. Very, very thin. The first high volume node was this. So instantaneously, that's going to act as a level of resistance. Can you see that? This little peak here? This is what you want to be paying attention to. And where did it cap price? There. Look at the rejections on the wicks. There. Okay. That was the reason why on that very day when I saw this, I was out. Okay, 275s, average exit. I'm done. See you later. Did I short the market on the way down? No, I haven't. No, I haven't. Okay. Have I been looking for longs? Yes, I have. Have I had any reason to take aggressive longs or swing longs? No, I haven't. They've all been very, very short term. Yeah, Gianna, what I want to do is just do some foundational educational videos, and then, like I said, if I have time later this year, I'll do some more advanced sessions, real-time examples, or maybe some live streams with some real-time hindsight examples, so you can understand the concepts of absorption, exhaustion, looking for the delta unwind, okay? But all this information is already out there on the internet. You don't need me to teach you. You can find plenty of it on YouTube. So, you know, you can give yourself a head start. What do you think about Total 3 and others? You want my honest opinion, or you just want me to be objective about what I think about Total 3? Or do you want my honest opinion? Honest opinion is... Honest opinion is this. I think I wouldn't be surprised to see price do something like this. Fill in all... In fact, here's a good exercise for you guys. You see this structure here? Let's go into the 3-day. You see this origin down here? You see this fast move up? What you will find is price staircases down. Does this? Rallies, down, shelf, rallies, down, shelf, rallies, down, straight into the origin. Then we might get a reaction. That's what I honestly think. In fact, there's an example of it here. Look, fast move up. Months and months and months, or weeks and weeks and weeks of slow bleed down into the origin. Where's the origin? Right there. That's the type of setup that I love to play, okay? Fast fucking move down into that zone. Then we can think about, right, that's enough of a cascading liquidation. People are being wiped out. Let's hit a reversion long back up. I think there's some examples of this on Ethereum. Again, look at ETH. Very clean. Very, very clean. Origin of the move. Fast move up, slow bleed down. This was the... Wasn't this some sort of news here, wasn't it? Was it the ETH ETF news that caused this to pump? I think it was. Because I remember trading this. And they just exhausted out over here and then traded lower. Straight down. Filled all that inefficiency. And where did it land? Straight into that sweet spot. Right into here, okay? Couldn't ask for a better setup. And here we are once again. What we've done, fast rally up, slow bleed down. This was the level that I talked about on several streams. This has to hold. It didn't, it failed. When that failed, that was it. And then this is nothing, this is just bullshit in here. Expect lower prices. That's my honest opinion. So total 3, honest opinion, objectively, I wouldn't be surprised to see these fast moves up, rejection, bleed lower down, fast move up, bleed lower down. It's a slow, gradual, painful process. A lot of chop, a lot of rotation, but for those who have a very good strategy and know how to trade this, and I've traded this before, it's going to give you some very, very good trade setups. And generally what you find is that it really, really does something very clean. It gets ever so close to taking out these highs, but it just doesn't do it. And it stops here, just short, and then rolls over again, taking out the previous lows. Okay, just something to watch out for. In most cases this happens. That's not to say that it can't take out the highs, but in most cases it just does stop short. And it's the same on the way up as well. When you have those trending markets on the way up. BTC is about to tap the Feb low, really? Okay, let's have a look. Holy shit, what have you guys? Fucking hell, what happened here? Fuck me. Alright, cool. Nice. Well, there you go. It is what it is. Trading light, yes. Well said. I nearly forgot about that. Just want to watch something here. Sorry if I've gone silent. I'm just quickly watching one or two things. So just watching something like this here, you want to see this key SR level at 91.8. I think if we get back under there, then we probably will run that February low. All right, trading light. So what do we have? What do we have? Yeah, Agora is something that I use for trade execution or watching the flow. All right, yeah, that's fine. Let's just bring the charts. All right, so trading light. I think let's start off on the. Let's just go through all the various pairs. Bitfinex USD. You can see that there's a fair amount of stacked bids, grouped by 1,000. Let's just do 500. 91.5. I believe that low is in at 91.6. So 91.5, you got 127 Bitcoin and Bitfinex. Let's go through. So what I would normally do is write a note. I would have like several panes of these open. BTC, USD, and Bitfinex again. You've got really not a great deal here. It's not the major dominant exchange, but again, you've got some levels of bids resting there. But what's more important to me is what's happening on Bitstamp. Not a great deal here. Okay, so over to Binance. Group by 500. Fairly decent book depth there. Another tool you can use is, I think, is Okotoki, which has gives you the book depth or the depth of market across several exchanges all at once. But 91.5 is certainly interesting. That swing low. And then Binance, USDT. So again, 500, that 90 to 91.5 really needs to see some form of reaction from there. If not, then yeah, we probably will revisit that 88k level. I mean, it's today's Monday, so we might have a nice Monday range to play. So if you take Monday's high, which is that 96k level, I don't know where Monday's low is going to come into yet, but we'll just have to wait and see. But I think, look, if you want to keep this really simple on BTC, what I would probably say is go to the monthly chart. First things first, what do you see here at the highs? Okay, 2 rejections. We've never closed above 1 or 2s again. And I've always talked about, look at the higher time frame, look at the wicks. Okay. So for me, in all honesty, when you look at it from a monthly perspective, this is how I would map out the market. You've got January's highs. Here, that's January high. Let's just do that in black. And then you've got still some days to go in February, but you've got the February high and you've got the low developing still. Let's just take the current low. Okay. Are we going to see a reaction now be below February's low and it stops short of January's low? Shorts pile in, they get absorbed, they're offside. Longs start piling in, shorts get trapped. Back up and clean up these highs. Possible, right? But the key is what happens in here. Or do we go for the next level down, which is this entire demand zone? And the risk to the downside here, again, I'm not sure whether it's going to happen. But the risk to the downside is this scenario here. You get price such that it takes out these lows, pushes back inside, rolls over. Now you're in trouble. Okay, now you've got to think, shift out of range. If this was a range inversed, you would be looking for that trend continuation. If it reclaims the range, right? So if you get the reclaim, like price breaks up, back inside, but pushes up again, I would go with that stop in here, looking for that trend lower down or breakout essentially, okay? So just be careful of that scenario. Thanks, Jared. But yeah, I'm going to wrap it up soon. So they're the two key levels that I would look for. And then with that, watch the flows. On the tape, what you're looking for on Agate is essentially a short slamming into this level on the dome of the ladder, and they're unable to push price lower down. Volume, relative volume, always seen spikes in relative volume. Okay. This is the TPO chart. So again, looking at this, very you got some single prints here. So again, it's looking at these single prints here, right? Are we going to trade? This is a very thin move down in terms of volume profile. You can see value area low, value area high. This is where majority of the day's volume has been. We've got that, I don't know if you're familiar with this, we've got that P-shaped, okay? So are we going to see a run of this low here, all these single prints, and then get back inside and trade back into, inside that range, essentially? Yeah, Mark, I talked about the free private group at the start of the stream, so just go ahead and watch the first 10-15 minutes of the private stream. Then you've got just looking at the delta. So this is a type of a footprint chart, volume footprint. Personally, I prefer to use Excel charts or Sierra for Bitcoin. But we'll cover that in the streams. On the private streams, I should say. Yeah, I think that's it, folks. There's really not much more I can cover or think about covering it. I've been on stream for 1 hour and 40. I would say I'm not sure when I'm going to be streaming next publicly. I'm just going to do the 4-week private thing, and that's it. I'm going to take a break from streaming. There's some things I want to do from a trading perspective that I really want to focus on. And I've got some other stuff I need to do in my own personal private life as well. But I hope you found that session useful in terms of thinking ahead. What I've tried to do is give you some context in terms of what to look for over the coming weeks, coming months, how not to get caught offside when you think price has shifted context and everybody's bullish all over again, but really it's just a dead cat bounce. How to identify those, how to take caution against getting trapped in that mindset. And then before you know it, you're chasing tops and you're losing more money in the way down. This is going to be a very choppy rotational environment over the coming months. And the risk factor is that, like I said, the 25 weekly EMA is now at 88K. And if you've listened to what I've preached over the years, is that we clearly are losing momentum here, okay? The risk factor here now is the compression of the bands. And if you get that compression, then we certainly will get that expansion to the downside. We never got it here. We were in a range bound environment, right? But if we do get that here, then price will probably be somewhere down in the 70s by then, okay? But that's Still a fair few weeks from that possible scenario happening. Could happen, right? But looking at this just on a higher time frame chart, that is the area that has to hold, in my opinion. And when I say hold, I'm referring to, I don't mind price trading below it. Okay, making another lower low before we see potentially another lower high. But then you're really counting on this structure here, something like this. That higher low. And I'm not too sure we're going to get that. I'm not sure. Heading into Q2, Q3, I'm really not sure. I personally, as a buyer of Bitcoin, I would much rather buy lower down. I think that's a good opportunity. But like I said, I'm currently hedged. I'm willing to let go of my spot Bitcoin if I see the breakdown and ride the short down, capturing this part of the move, okay? And gold is going higher. That really doesn't look good on SPX at the highs. On a monthly perspective, there's problems if on a monthly perspective by month end we can't seem to get acceptance back above 60, 70. You got 1, 2, 3 wicks at the highs. I think that's something that's certainly worth paying attention to. And if this starts rolling over, then you can probably bet Bitcoin will also start rolling over lower down. He is, yeah. He talked about the tariffs, which has added pressure to the downside of markets. Correct. CK, if you fill in the form and just leave a description of your situation, then certainly do that. But please provide all details on the form, including the exchange user ID, and I'll pass it over to the team, and they can probably reach out to you in terms of next steps, if there are any. Deadline for the private group, I would say, if we're going live on the 9th, I want to get it wrapped up by the 7th. I want everybody onboarded over the next 10 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So into next Friday, 11 days, and that's it. We'll kick off the first session on the 9th. I will communicate via Twitter, and then from there onwards, it's just going to be in the Substack. Okay. Yeah, there's AI uncertainty with NVIDIA. We've already seen Microsoft kind of talk back their desires with AI, which is somewhat negative. Yeah, all right, guys. Look, I'm going to call it a day. I just want to say a very special thank you to everybody for the support and love shown over the years. I think since I came back to streaming in August, we've done very, very well on Bitcoin. We've nailed most of the Bitcoin trades, if I recall correctly. So I'm very, very pleased about that. In terms of the context, when Bitcoin was in that range bound environment, I think I started streaming back in August, was it? And I explained my reasoning for being bullish throughout this whole period here. Okay, from this period onwards, when I came back in August, that I was looking for longs. That this isn't just because we've got a break in market structure, that we've got lower lows. It's not a trending environment. It looks like a phase of reaccumulation. The fact that we hadn't taken out these highs over here, right, gave me some level of conviction that we could see higher prices in Q4. The difference this time around, right? I know a lot of people make comparisons to this over here. what gives me concern is the fact that we've already taken out the highs. If we hadn't taken out the highs and left them, then I would say, yeah, you know what? There's a good chance we could trade back up here. But when I'm looking at this price reaction for now, I'm just looking to trade this, but I am, like I said, being defensive. I'm not rushing into a long anymore like I was doing here, here, here. All these plays I shared on the timeline. Okay, even this over here, me and Orders and Flow, when we streamed in January, we talked about this exact setup. We absolutely nailed the setup and traded it higher into that 63k level. I caught this move. I've caught the meat of this move. I've hedged at the highs. I don't know if this holds, but I'm probably going to start selling some of my spot, but I'm hedged with a short, so I don't suffer any drawdown on my Bitcoin position, okay? And I'm open to the possibility that if the reaction is weak and we underside retest or get back inside and roll over again, then this area is all a thin inefficiency, and we could very well trade. If 88 doesn't hold, then the floodgates are open for even better prices lower down, and then we'll see what happens, okay? I think in my mind, in my head, I hate doing these like bullshit scenarios, let's just call them predictive, not trading, but more predictive. If there's a level that really stands out for me on Bitcoin, is this here. It looks painful, and it probably will be painful for people, but something like this, obviously not in one candle, but give me that. I would absolutely love to trade this back into the highs again. And it's very similar to the Solana structure that we covered earlier today, right? These lows here. Can we take these out and then see what happens? Obviously, I'm not advocating for this to happen in one candle. Just maybe using a blue line was a bad idea. But the point I'm trying to make is that over the coming months, quarters, are we going to get something into this zone here? That, I think, would be a lot of fun to trade on both sides of the market, shorting it down and then longing it, looking for buying opportunities at the lows. But again, that's not actionable. So, and I'm not trying to shit anybody up. I think it's always good to think of like edge case scenarios or worst case scenarios. And I would say that's certainly something to consider if we trade down here, or if we move down into the, how are you going to react? What are you going to do about it? Okay. What if you're already positioned and you can't handle that drawdown? You need to think about that scenario. But that probability increases when we're trading below here to this next objective. And then if we get a reaction and failure to hold this level, then guess what? We're back in this trading range. When you are in a trading range, the chances are you're going to revisit the other side of the range and so forth, okay? So that's trend down, might get a reaction. This might be the bottom. It could be, but if it isn't and it falls into this range, you've got all this area that comes into contention. And from a trading perspective, that's going to give you some fantastic trading opportunities, okay? If you're a long-term investor in Bitcoin, I wish you all the best. I think Bitcoin is going to be a fantastic asset. I think it's just going to continuously go higher and higher in 30 years' time. If Bitcoin is still around and, you know, the world hasn't gone to shit, I suspect that Bitcoin is going to be significantly higher from where it currently is today. That's what my belief is anyway. I think so. In terms of my live streams, you can see I first started, so I was very active on the timeline in August, and then all the videos, 8th of September through to today as the last stream. So 1, 2, 3, 4, 6, 8, 12, 13, 14, 15, 16 streams. Okay, it's been a good 16 weeks in terms of trading Bitcoin, but I think now is the time to really think about what lays ahead. And I really look forward to taking a break. So thank you very much, guys. I wish you all the best in your trading journeys. For those of you who are joining the group, I hope to see you on the other side in the private Substack for 4 weeks. And hopefully we can raise some good funds for charity and donate that. All right. Wish you all the best. God bless. Take care. See you soon. Bye-bye.